Big personal news for you today. You have said that you are going to donate $25 million to your high school. And what's notable about that is it's a public high school. You've given a lot of money over the years here in New York City to Catholic schools. This is a shift, but an expansion of your philanthropy into education. Why now, and what prompted you to do this?
Well, what prompted me to do this is I was asked to do it. It's like a lot of things in life, and then you think about what somebody asks you. I went to Abington High School. I had a great experience.
Track star there, I believe.
Yes, apparently. Hard to imagine now, but that was indeed the case. We were state champions, and I was president of the school, and I had a great experience. And the reason I'm doing it is the high school that was relatively new when I went there is now being upgraded. They're adding a wing for science and technology. And the state of public education varies all over the country, but part of the problem is at Abington they didn't have enough money to do everything that they wanted to do. They did a bond deal and had a variety of needs and could allocate $75 million to the high school, but they really wanted to do a variety of things that cost $100. And so they came to me to fill the difference. And the issues that were on my mind weren't necessarily 100% the issues on their mind, although most was a big overlap. I was interested in making sure that any graduate of my high school, and frankly, every high school in the country, is that they should be computer literate, that each student should be exposed to coding so that they could be successful, not just in today's world, but tomorrow's world. Because we've got a real mismatch of skills in terms of what we produce for high school graduates and what's needed to get a great job and to be able to grow with the global economy. And so I said, for me to give the money, I want to make sure each one of these students is really prepared for the future. And they said, that's great. That's a great thing. We'll do that. And so the next thing for me was, okay, that's fine for my school, but we've got the wrong model, or at least we could have an enhanced model for public school education. Because part of the problem, Jason, is that with income inequality, half of the people in America live paycheck to paycheck. That's not enough of an economic base to get enough tax revenue to basically have great schools. And U.S. public schools basically have gone down from when I went, where we were #1 in the world, to currently in the sciences we're in the 30s. Overall, we're down around 27. It's not sustainable for the United States. So if we can get people around the United States to basically satisfy the needs that the people who run schools have for additional programs, for things like each student having a computer device, some kind of a sort of education on computer science, so that we can start bending the curve up. If the schools can't provide for it, somebody's got to. And if we can change the way people think about their public schools and get the people who run them to go out into the community and get those financial resources.
Well, and I wanted to ask you about that.
That's what's important.
Because you're headed from here down to Tennessee. You're going to speak to, I believe, about 3,000 school superintendents, and you're going to talk to them essentially about deal making, right? Deal making on their own behalf.
Yes.
What are the hurdles, if any, that they have to overcome to raise this sort of money? Because your gift, as I understand it, is the largest ever for a single public school.
Right.
So what do you have to change in terms of their thinking and their attitude?
Well, leave me aside as an outlier, but there are successful people pretty much in almost every community in America, whether they're car dealers or people who own real estate, or people who own the fast food businesses, or athletes and other entertainers. We have a variety of successful types of Americans financially. They just have to be reached. And the people who need to contact them are the people who run the school. So they have to set up what's called a 501c3 to make it tax deductible for people to give that money. The second thing is they have to identify all these alumni. Then they have to contact them either by calling or writing and telling them why they want to see them, what's on their mind to see if there's an overlap. And then they have to go and give a presentation. Now, for those of us in the business community, particularly in finance, at Blackstone, we started with no assets. Today, we've got $434 billion. That's a lot of what I would call begging and groveling.
Right.
And
so you're going to put on a clinic in begging and groveling. I like it.
Well, it's part of the American way.
Right.
But it's not what people expect to have happen with public schools. They give to private schools, charter schools, universities, and graduate schools. And people expect that in the United States, and people do it generously. But public schools have just not been on the page. And what I want to do is help engineer a paradigm shift. Right. And what was fascinating for me is I got an email yesterday after this donation was online in the Wall Street Journal, and some person emailed me and said, I went to Abingdon High School. I never thought of giving them a dime.
I didn't know I could do this.
Now I'm going to do this.
Right.
And if we can change the way people think, change the social fabric to permit this, and have extra money to accomplish unusual and important goals, then that's a good thing.
So I have to imagine when you're talking to these superintendents, they're going to ask you, as someone who's in the markets, about the market over the last couple weeks. Is this volatility we've been seeing normal? Is it a new normal? How do you look at it?
I think it's like pretty normal. And if you look at the world, the developed world will probably grow around 3% this year. Could be wrong. Could be 3.25. Could be a little less. And the stock market was up about 7.5%, 8% in 1 month. So multiply that for 12 months, and what do you get? You get stock market performance, if you just annualize that, somewhere in the 80s to 90% with 3% growth. That is simply ridiculous. And so you had to stop that kind of compounding, or else you have almost a whole year's performance in 1 month. And so what's going to happen in that scenario? Well, it's got to go down. And then it'll go up, and then it'll go down. It'll just be a more volatile world. But I sort of look like what should happen at the end of the day, not hour to hour, the way television works, or traders work, or day to day, or week to week. I think with the economy looking so good around the world, that we'll have an up year, and it can't be hugely up because we already did huge last year, and it'll find its way.
And do you think more deal making this year or less in terms of private equity specifically?
Well, just generally, you usually have more deals when the markets feel good and people are confident in prospects for their own business. You seldom buy somebody else's business if your business is having trouble. So as business confidence remains high, you'll probably see more activity.
So one area that I know you're very personally interested in and professionally interested in is China. And when it comes to deal making, certainly there's a lot of, let's say, activity and interest right now, especially between H&A and Anbang, some real estate assets potentially coming on the market. Are you a buyer here?
Well, we're always a buyer of things at a price, and we're not a buyer at another price. And so there may be, from those two companies, more activity just because they bought a lot.
And some familiar assets for you.
Well, we've sold both of those companies, what we thought were very good properties, and if they want to sell them, certainly we'll take a look.
One of the chief architects of that all of that business is John Gray, who earlier this week you named to be your president and COO. A long-awaited and much anticipated move. How does this change your role now that you're going to have really three guys at the top, you and Tony James and John Gray? How do you split the duties there?
Well, we've actually spent a lot of time talking about what everybody should do. You know, when you're new in a role, there's a learning curve. And in a complex business like ours, not just the business element, but we interface with regulators, with the political process, with the media. This is a bit of a, learned behavior. And so, for John, he's the chief operating officer now, taking over from Tony. And he's got, hire, fire, pay type of responsibilities and other normal types of things, and focusing on some of our businesses. You can't do everything in a first year, and you shouldn't. And Tony is going to continue and be on all of our investment committees, where he's, really phenomenal and a great teacher of our people. He's going to be working with new businesses that we start, because we always are doing things in that world. And he'll be also externally visible because he'll have time to do that. So Tony's got his roles, John's got his roles, and I couldn't
And so
be
what's
happy.
your role?
My role is just to be happy. The idea of working with friends and some of the best talent in the world, and that's on a broader basis at the firm, is for me just a privilege. And I love thinking about new things we should be doing and marshaling resources. And as you get a little older, which you'll experience at some point, is you become a player coach. And when people need internal advice, and sometimes we're in the crisis management business. Sometimes we cause those crises to resolve them. Those are called deals. And sometimes things just sort of happen from the outside world. I love doing that stuff. And sort of sitting around strategizing with our management committee. We're in, like 6 major business lines, and everybody who's in charge of every one of those businesses is a superstar. So for me, making sure, in a general sense, that things stay on track, and meeting with each of the groups, every week, it's fascinating. And some of us have something to contribute from, sort of I dare say, I know this sounds miserable, but it's just about 50 years I've been doing this in finance. And, every day's a new day. Nothing ever repeats. They rhyme, but it's not the same.
So let me ask you this. You've said that you could get to $800 billion in assets under management at Blackstone. Almost double where you are now. Do you need to go and buy something or start an aggressive new business to get there in the next few years?
Well, we like starting things. When you keep your own culture, that's always the best. It's hard to find things to buy that have the same, commitment to be the best in the world type excellence, openness, cooperation, transparency. Not everybody operates like that, and we don't compromise on our core principles. And if we find things in an area that would be interest to us, we occasionally buy things. But when we do, like we did with our secondaries business, it ends up growing like 3 times in 3 years. The smaller type of business in a niche, which can profit from, sort of, if you will, our distribution or relationships in the world. But it's got to be a special thing. And I think the opportunities for us to start things and grow them, which is basically what we've done. 60% of the products we offer to the investment market didn't exist 10 years ago when we went public. And there's also going to be changes in finance. I think that it's inevitable that that there will be access for the retirement market to our products.
For the retail market.
Yes, and when that happens, the scale of what we could do, just doing the same things, is limited really by our ability to find great investments, not by capital. I never worry about getting capital for our activities. I always worry about can we be the best performers in the world in everything we do with absolutely minimal risk.
Let me ask you one more question, because you mentioned where you get all that capital you're getting. If you had to sum up the attitude of the big institutional investors in one or two words right now, what would it be? Well,
they love the alternative asset area, and they need high returns with safety, there's only one genre of product that they can go in, and so they're putting very substantial money in our asset classes.